Constellation Brands, Inc., NYSE, STZ. Due diligence report date, September 2025. Executive summary: business, global beverage alcohol company with leading beer brands Modelo, Corona wine and spirits portfolio, and growing premium ready-to-drink offerings. Market reality. Stock has pulled back materially year-to-date, amid weaker beer demand and an earnings guidance cut. Market cap sits in the $20.30 range. Near-term situation. Management trimmed fiscal outlook citing weaker beer trends and announced inventory rebalancing to address demand weakness. Analysts responded with price target cuts and mixed ratings. One company overview and business model. What they do: manufacture, import, market, and sell beer, wine, and spirits across on- and off-premise channels globally. Model: multi-channel distribution with revenue driven by brand strength, pricing, and seasonal consumer trends. Profits are anchored by scale in beer and higher-margin premium spirits wine. To industry and market position. Industry: beverage alcohol, including beer, wine, spirits, and ready-to-drink categories. Position: one of the largest players in U.S. import beer, with Modelo and Corona. Also maintains a diversified wine and spirits portfolio. Faces competition from global brewers, regional players, and private label brands. 3 revenue streams: beer, core revenue driver Modelo, Corona, wine, and spirits. Premium products provide margin diversification. Other: licensing, partnerships, and limited direct-to-consumer channels. For competitive advantages: strong brand equity with Modelo and Corona. Broad U.S. distribution network and international reach. Balanced portfolio across beer, wine, and spirits for margin flexibility. Organic: geographic expansion, new SKUs, premiumization, and marketing. Inorganic: M&A potential to reshape portfolio. Constraints: category softness in beer and shifting consumer preferences. 6. Financial statement analysis. Income statement. Recent results included weaker beer demand and a downward revision in EPS guidance. Profitability is pressured by softer volumes and impairments in wine and spirits. Balance sheet historically supports operations with solid cash flow generation. Debt and goodwill require monitoring. Cash flow: strong operating cash flow from beer helps fund dividends, buybacks, and reinvestments. 7 key valuation metrics. Market cap $23 OB. Dividend yield: low to mid-single digits, dependent on share price. Multiples: PE, EV, EBITDA, and PS, compressed after guidance cut. 8. Growth potential and TAM. Beverage alcohol is a multi-hundred-billion-dollar global market. Growth drivers: premiumization, innovation in ready-to-drink formats, international expansion, and pricing power. Headwinds: consumer downtrading and volume declines in beer. 9. Competitor landscape competes with AB InBev, Heineken, Molson Coors, and regional players. Competitive dimensions include brand strength, marketing, distribution, pricing, and innovation. 10. Management and governance. Experienced management team with focus on portfolio balance and brand development. Recent emphasis on inventory rebalancing, margin management, and cost control. 11. Risks. Demand risk: weakening beer consumption trends, cost inflation, higher packaging, transport, and input costs. Impairments: goodwill write-downs in wine and spirits remain a risk. Execution: managing inventory, rebalancing, and channel shifts. Market sentiment: analyst downgrades and price target cuts weigh on valuation. 12. Dividends and shareholder returns: pays a regular dividend with moderate yield. Balances dividends, share repurchases, and reinvestments. 13. Insider and institutional activity: substantial institutional ownership. Insider activity is closely monitored for signals of confidence or concern. 14. Technical analysis signals: shares recently sold off sharply following guidance cuts. Price action shows increased volatility and testing of multi-month support levels. 15. Recent analyst ratings and news analysts cut price targets after earnings guidance was revised lower. Opinions are split. Some see weakness as a long-term buying opportunity, while others expect extended pressure on earnings. Investment thesis. Bull case. Strong brands, pricing power, and diversification provide resilience. Innovation and premiumization could reignite growth. Current weakness could be an entry point for long-term investors. Bear case. Structural buyer demand decline, impairments, and soft consumer spending may pressure earnings and valuation for multiple quarters. Key catalysts: signs of beer demand stabilization, progress on inventory rebalancing, margin recovery from cost control, performance of new product launches, especially ready-to-drink, dividend policy updates, and capital allocation announcements.